where we talk about current market conditions, earnings season, tariffs, geopolitical risks, and go over technical analysis, what to expect going into the year end, and what are the opportunities in the market. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. I do see some new names. So welcome. If this is the first time, just type in first. Always want to welcome new subscribers. Sylvia, welcome. Disclosures are very important. I'm going to go to specific trades in my portfolio. So it's very important to understand the risk associated with trading stock or options. And if you haven't seen the slide before, I encourage you to visit optionsclearing.com so you can understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. All right, this is the goal, to become disciplined, confident trader. We're going to go through trading plan and some of the trading psychology. That's the reason behind the yellow tunnel, is psychology. But let's jump into the models and markets and see if we want to adjust or look what's happening as we are in the middle of the earnings season, right? We have Microsoft, Google announcing earnings this week. We have Tesla, Netflix. I think 85% of the S&P 500 companies are outperforming, right? And outperforming the analyst estimates. You can see a clear breakout in spiders and QQQ, right? So high beta stocks like semiconductors, spiders continue to outperform and breaking out. Next level, personally I watch SPX because of the positioning data, right? Futures and options positioning data. So right at the 6,900, nice round number. Taking a little pause, we broke through the 6,700 decisively. So 6,700 is your new support right now. 6,900, there's some positioning. 6,900, most of the positioning is now in the 7,000, right? Nice round number. A lot of analysts anticipate market reaching 7,000 level by year end. So that's kind of people position, but this is only within 1.5% away. So 10-year yield continues to trade lower. And the pattern of lower highs and lower lows, right? This is the main bullish argument. Bull's argument is that as long as interest rates continue to go lower, that is usually market performs well, right? Because it's easier to refinance the debt. You have broad enough participation of more stocks. Small caps, mid caps had a strong performance in the past few months. And the past ability is for the rates to be lower lows and lower highs, right? There was anticipation there's another rate cut coming up this year, and I think 2 rate cuts are canceled for next year. So rates going in the right direction for the bulls. Dollar is also stable, right? After the Liberation Day, phase 1, kind of trading in a very narrow range, which is also bullish for the market, bullish for S&P 500 companies, right? The conglomerates that have exposure to outside of the United States. So that's also beneficial. You can see high yield with the drop on fears of escalation of tariffs, 100% tariffs on China that was announced first couple of weeks of October. Market sold off, and now looks like at least amicable solution, which the meeting between Trump and President Xi coming in, I think Thursday, right? Thursday and Friday. And market anticipates, based on high yield and technology stocks, anticipates peaceful, that they will find amicable solution to the tariffs and rare earth metals. So you can see high yield rally, right? The spread between junk bonds and treasury narrowed, so that's good. VIX got to 28 after the escalation in tariffs and now dropped back to 16. Again, everybody anticipates that there will be some amicable solution. QQQ continues to make new highs, right, breaking out. And spiders are same thing, continues to break out. Small caps for now struggling to break out. right? But they're still close to all-time high, which is positive for the market. And value stocks in general, VTV or RSP, equal weighted S&P has not, unable to break out yet. Right? It tried a couple times, kind of rejected, but still pattern of higher highs and higher lows. So if you look at our model on yellow tunnel, right, all of the services that we have, we provide the different models. So aggressive power trader, the model runs every day, right? Every day before market opens, provides you signal today, CVS, Expedia, General Dynamics, and NVIDIA, right? So these are the signals for today that market-based model sees that these stocks will outperform its peers. They're in uptrend. You can see they're actually up. That's good. And then for spiders, prediction is 679 is your support. 670 is the main support. I agree. We talked about 6,700. And overhead resistance is 685, right? 690. And we're trading slightly above that level, 687. Longer term model sees that maybe we're too far too quickly, right? It anticipated 684 only in the next couple months. But we are, and the long-term predictions get adjusted every day. How's the sound? Can you guys hear me? Do you see any background noise, or is that okay? Let me know if the sound is okay. I just want to make sure. Let me just, Michael. Okay, perfect. Sounds okay. All right. So that's spiders. Right, based on the model. So it basically says short-term market is overbought. Yes, we can get to 700. Model sees that maybe end of November in the next 10 trading session, we might get to the 700 level, but longer-term prediction says that the market is overbought. And it shouldn't be at these levels currently. So that would be the spiders. Give me 1 second. Let me just pause it for 1 second. Sorry about that. Apologize. Larry, welcome back. So that's what the model basically says. So you have signals like NVIDIA continues to grind higher up, 1% today, and the signal is generated before the market opens, right? These are predictions for support and resistance levels that are done before the prior open. And we send email and SMS messages informing you of these levels. If you zoom out and look at the different support and resistance levels, so let's look at gamma exposure on SPX. So the support, so the put wall is at 6,700, the call wall is on 7,000. So that basically shows you that the main overhead resistance right now is at 7,000. A lot of people are buying calls, right? You can see the largest concentration of call buying, open interest, right at that 7,000 strikes. Not a lot at 6,950 or 6,900. And then downside, the first support is 6,800, then you have 6,750, maybe 6,700 is the largest open interest of puts, right? So if you look at the open interest, the largest one is here, 6,700. So that's basically supply and demand for the option contracts at certain strikes across all expiration months. So let's look at the end of the year. Most of the actually positioning are now in December, right? So you have, if I select actually, sorry, if I select all months, if I look at the select all expiration months, the highest concentration is in December, so about $42 billion. Try it again. So let's look at the end of the year. Let's look at the end of the year. December contract, let's see. So if you look at the one standard deviation, right, one standard deviation move, so here, we actually see 7,100, as high as 7,100 on the SPX. So one scenario, we get above 7,000 level, right? So 7,100, maybe 7,200, right? That's scenario number one. Scenario number two, right? Maybe we don't reach an agreement with China and we are trading between October lows, this month's low, 66.50, right? And the 7,000, right? So we're trading in this range. And then scenario number three, we are we still have a government shutdown where the unemployment data is unavailable. But once it is available, maybe we see the uptick in unemployment, right? And China, U.S. imposes 100% tariffs on China. China retaliates, and then you have unemployment spiking up. So then you have scenario three where we break through October lows and going to 6,400, maybe even as low as 6,200 level on S&P. So those are the three scenarios going to the year end, right? As we approach in November, December, usually it's pretty bullish time of the year, right? Christmas rally. So how many of you think we can break through this overhead resistance of the 7,000, right? Scenario number one. Scenario number two, now we're trading in the range between 7,000 and October lows. Scenario number three, signs of recession, maybe Amazon came out, they're laying off a lot of people, and many other companies start announcing that with the AI, you need a lot less people, like JP Morgan said, you need a lot less people, and that AI making people more efficient at their jobs, and you start seeing uptick on unemployment. Or maybe construction, right? Housing data has been very weak. Construction, there are a lot of construction jobs that potentially can be lost, and then you have scenario number three. So how many of you say scenario number one, we're going to break through the 7,000 by end of the year? Scenario number two, no, we're trading in the range, somewhere October lows and 7,000 level. Then scenario number three, we're going to break through October lows and continue to grind lower. Bing, welcome. G, Larry, Melanie, Michael, Rimvidas, Tim. So how many of you say one? We're going to get to the 7,000 and break that level, right? We have Microsoft earnings, Google earnings, Apple earnings. Everybody's buying AI. There is a lot of, investment in that space, and we're, heading higher. Scenario number 2, still government shutdown, still, macroeconomic data showing that the economy is cooling. Scenario number 2 and scenario number 3, some kind of signs of recession or dislocations in the market. Anyone? I mean, why is this important exercise? This is an important exercise because it helps you with the position size, right? The idea of trading psychology and yellow tunnel to become disciplined trader, you need to decide, how much money are you willing to invest behind your ideas, right? Or behind yellow tunnel signals, right? And that is kind of a personal decision, right? We all have different risk tolerance levels. So this is where this exercise is important based on your trading style and horizon, right? You can make a decision how much money you're willing to risk, right? And if you set scenario number 1, you need to consider scenario number 3 as maybe your stop loss. Maybe this is your stop loss, right? So you know how much money to risk, right? So if you're buying right now at 68.70, right, on SPY, and your stop loss is, let's say, 65.50. Well, that's what, 30 points, right? So maybe you use 3, 4, 4 or 5% stop loss, right? If you think 6,700 will hold, then you maybe use 18 points stop loss. Maybe it's 18, maybe it's 24, right? And if you're doing day trading, then maybe 6,800, right? 6 points stop loss. That helps with determining position size, right? If you're doing day trading, yeah, today we're probably not going to get to 6,700, right? Unless there's some major news. So you use 6,800 for day trading. If you're thinking about a couple of weeks, maybe you use 6,700. If you're thinking about October lows, then 6,550. Melanie 1. All right. Anyone else? Tim, you've been here before. Michael, Larry? Anyone? All right, I'm gonna go with 1, 2. I think, at least right now, 80% probability, there's a higher probability that there will not be 100% tariffs on China first week of November. There won't be 35% tariffs on Mexico that's due first week of November. Nobody wants to steal Christmas. So if that's the case, 85% of the companies are still beating the analyst projections for this third quarter, and interest rates are continuing to go in lower, and inflation CPI data that come in is continuing going lower. So it looks like a recipe for end of the year rally, and we are already at 7,000, right? 1%. So I think we will break 7,000. One standard deviation right now 7,100. It could be 7,200, but those are all possible scenarios going into the year end, right? I would still maybe, have some hedges, even though I'm structuring bullish portfolio, but I would still have some hedges to hedge in case, there is 100% tariffs on China imposed this week, right? That would be probably the biggest risk. On the, government shutdown, at some point, more and more people are going to get, will miss their checks. Government is the biggest employer. So that will trickle into, first of all, GDP. Every week that the market government is shut down, GDP contracts, and then more and more people stay unemployed or become unemployed. So that is the risk, right? Ideally, there will be an agreement going into Thanksgiving and Christmas, but for now, no signs that there will be an agreement. So definitely some risk makes sense to hedge. How do we help on yellow tunnel? So I already went over, first of all, we have free services, right? So you have videos, webinars that I encourage you to review on trading psychology, on trading plan. There are different topics that I encourage you to visit and review. All great content. We have Thursday webinar on AGT platform now, and we have Tuesday webinar here, so you can review them here. We also have blog, Power Trading Markets blog. Gets published every Sunday. So we have webinar on Tuesday and Thursday. Every Tuesday and Thursday at 12 o'clock, there's a webinar. Hopefully you guys can make it this Thursday as well. And we publish blog. This week was the idea on the Micron, and then some of my personal experience. So please add info@yellowtunnel.com so you can get the videos and the blogs every week on market conditions and opportunities in the market. Then aggressive power trader, the model runs every day. This is perfect for day traders or short-term aggressive trader, right? If you're short-term aggressive trader, if you're day trader, you're looking for signals, then this is every day we publish. Today, NVIDIA, all these signals, I personally review them, making sure that I agree with them, and they're being published every day, along with prediction on spiders. If you want to look at our AI model and analyze some of the other stocks, like let's say you want to Apple, going into the app, what does the model think about Apple? So then you would click on Apple, and then you have same thing. You have for today's session, if Apple reaches 266, consider going long. If it reaches 271, consider trimming your positions. Next 10 days, you could see 285 print, right? If all the earnings are strong, and still sees Apple in a strong long-term uptrend. So it makes sense to continue to, buy the dips on Apple or any other stocks that you want to, S&P 500 or liquid stocks you can analyze. So that's analysis. You can watch the recordings of our live trading room, different webinars, right? You can look at the, if you want to learn about calls, right? You can type in call, and then we'll give you different workshops on call spreads, right? To watch the recording. So a lot of great content. The strategy roundtable is also there that you can also review. So that's the recordings, and this is aggressive power trader. Any questions on aggressive power trader? Okay. Weekly power trader, similar idea, but this is not for day trading. This is meant to be more of a longer term signals. It's published every Sunday. It's, aggressive power trader every day. This is every Sunday, especially if you have full-time or part-time job. You just want to review it on Sunday and come up with your trading plan. So we have Archer Daniel Midland. We have some of the semiconductors, Bank of America, Google, GD. So these are a list of stocks that model gives you prediction for the next 5 to 10 trading session. And again, the idea, if you participate in live trading room, I encourage you to participate in live trading room. You can see that usually I propose to only have 4 positions at a time, and maximum loss of 2.5% of account value. This is where this rehearsal exercise is very important, because risk management is very important, right? If you want to become a disciplined trader, confident trader, you want to make sure that you always have the same position size and always look at, and this is where I would start. Obviously, if you have a bigger portfolio, you have more experience, then that number can become 6, 8, 10. But usually for individual investors, you don't want to have more than 8 to 10 positions. And in live trading room, it's been averaging 75%. Sometimes I trade options, sometimes I trade stocks. So if you go to Dynamic Power Trader and you look at you can look at the orders. This is actually my portfolio, right? I have Amazon, I have ES, I have Google. You can look at if you want to trade instead of, I have an Amazon stock, if you want to trade Amazon option that expires this Friday or next Friday, it also gives you suggested strike price and options expiration. Gives you prediction, again, the trend for Amazon, short term and long term. And then if you want to buy Amazon today, 226 is where you would consider buying, 227 is where you would consider selling, and we have a nice rally in Amazon. We're already at 229. Actually, I missed that. Is it 220? Yeah, so Amazon continues to rally into the earnings, actually at 230. All right, so that's one of the positions that I have, and this is something that you would look. But if you want to see what I actually trade, then you can go to orders, right? So you can see I got into Google spread, close my hedges, and trading around Amazon. So I'm almost at the Amazon exit point. So combination of both stock and options trade. I also hedge, right? If I see market is selling off, then I would put on a put spread to hedge my other positions. And you can get phone number. You can enter your phone number, right? And get SMS message every time I trade. You get email every time I trade. You can look at the history of all the signals, right, and the portfolios. And again, every time you can always do AI analysis on your own stocks. So that's dynamic power trader. We're in the middle of the earnings season, so there's earnings trades every week. I do earnings trade. I'm going to do either Google or Microsoft earnings trade. I usually either sell premium or buy premium based on the sentiment, based on the model, right? What the model shows, and usually, sometimes I do look for these outsized returns, right, where you have a well-defined risk, but you're trying to do 100%, 200, sometimes 400% return by trading options, right? If you're long volatility, one of my popular strategies, selling put premium. Like if I think Google is going to do well, or Microsoft is going to do well, then you would sell a put spread and finance it to buy calls, like we did in live trading room on PayPal, right? If you were in live trading room yesterday on PayPal, I said that we could, there's a very large concentration of calls and put buying for PayPal yesterday. So I sold the put spread. I sold the put spread on PayPal and bought the call spread 75-80, because this is where the largest concentration of call buying, right? 75 to 80. So that would be earnings power trader, and if you would see all my orders and positions here. You click on orders, position. I'm doing Google, probably Microsoft, so you would see my trades. So that's earnings power trader. And then profit accelerator is where I only trade stocks. Some people say, well, Vlad, I'm not comfortable trading, options. So then the idea is that, okay, we'll give you stock trading, right? So you can go to profit accelerator and look for just stock trade. Same thing, orders, positions, live recording. You can do AI analysis. And we also have a paid program. This is very aggressive, buying calls on signals and holding them for a week, right? So another service. So these are the paid services. If you go to dashboard, you can kind of have an outline of all these services. You can go through them and see what each of them offers. There's a welcome video, my welcome video that you can watch. It explains that. And again, we have dedicated support. We can schedule one-on-one consultation with Keith, our product. He's our chief trader, right? And Keith also hosts live trading rooms. So if you want to talk to Keith, this doesn't require any financial commitment. You just schedule and 15-minute, 30-minute consultation. You talked about blog, publish every Sunday, and then live webinar we have every Tuesday and Thursday at 12 o'clock. Any questions so far? All right. So in terms of, obviously market is overbought. You can see, some of the stocks like silver, right? Silver, gold, or metals and miners in general. You have these vertical moves to the upside, and then at some point you do have a gamma squeeze where it drops. Some of the more aggressive trading has to do with AI, like IONQ, right? We have IONQ that's got a sharp sell-off, is very volatile. You have MP, right? You have vertical move to the upside. So anything to do with rare earth metals or AI, you do see kind of consolidation, right? The consolidation, a lot of these names starting, and also Bitcoin, right? Bitcoin is probably #1 proxy for risk taking, maybe just as volatile as AI, and you can see kind of these sharp moves, 20–30% move to the downside, then some kind of consolidation, and then bull trend resumes. So that would be another observation in the market. Consumer discretionary trying to break out, but wasn't able to break out. You have utilities pulling back today. Technology continues to grind higher, but industry, everything else is kind of facing overhead resistance, whether it's industrials or banks or energy. Home builders continues to be weak, right? Not a lot of construction activity, despite the drop in interest rates. Signs that the economy is cooling off. Maybe not in recession, but at least cooling off. Biotech is doing well. Biotech continues to go vertically to the upside. And then what else? That's about it. All right, any questions? All right, if there are no other questions, then that's all I have for today. Take advantage of our free content, right? Sign up, open up an account, it's free. Just go log in, go to homepage and log into our site. All right, you'll be able to get a blog, invitations to the webinars, video recordings, right? So to help you navigate market volatility. If you're looking for signal, so you want to see what I trade, there's a live trading room every day, opening bell, closing bell. You can try any of these 6 services, and you do get 30-day money back guarantee. So in case, so that's all I have for today. You guys are awesome. Thank you for participating. We have a lot of new names: Bing, G, Larry, Manfred, Melanie, Michael, Rimvidas, Tim. Thank you for participating. Thursday, we have another webinar on Tuesday. We're going to talk about Greeks, option Greeks. So keep an eye on the email inviting you for Thursday webinar, and then next Tuesday we'll have the follow-up webinar. And I hope to see you in the live trading room. You do get 30-day money back guarantee, so try any of these services based on your background, and you get 30-day money back guarantee, free education. So can't beat that. So hopefully to see you there in the live trading room. Thank you very much. Michael, Melanie, thank you for participating and answering questions. Bing, G, Larry, Manfred, Melanie, Michael, Rimvidas, Tim. Thanks a lot. I appreciate your attendance and hope to see you soon. Thank you.